Okay, I'd like to take this opportunity to welcome one and all to our event today. That's September 9th, 2019. You got John Hopkins here. Tom Bowley going to be joining us in just a little bit. Tonight, we're going to be talking about the new earnings beats. We're not a new company. I know a lot of you are coming in and meeting us for the first time. I want to welcome you. Certainly want to welcome all of our subscribing members. Thank you so much for your great support over the years. You know, Tom Bowley and I go back 30 years. I had another company. Tom's a CPA. He was a CPA in a firm, took care of the accounting of the books of my company, struck up a friendship. And when we moved away from our respective firms, we spent a lot of time studying the market together. And in 2004, we started a little company called Invested Central. And we actually have people who were part of the original Invested Central that are still part of what is now Earnings Beats. But we started out as a one-page newsletter, blossomed into a lot of seminars. This is when you actually went on site and taught technical analysis. Fast forward 5-6 years ago, Tom and I started talking about different ways to approach the market. And you know, Tom never met a spreadsheet didn't like, never met an analysis, technical analysis chart he didn't like. And he was seeing things develop that made a lot of sense, that had to do with earnings and companies that report earnings and how they respond, how the market responds to those companies, and how some of those companies end up setting up as great trading candidates when they beat the top and bottom line. So we started earningsbeats.com. And then at one point in the history of our company, Tom was invited to join the stock charts team. Became a senior technical analyst over there, but we kept in touch on a regular basis. You know, we consulted with Tom. So even though he wasn't really involved on a day-to-day basis, that's about to change. So Tom Bowley's coming home to Earnings Beats, which is totally awesome. What's really great about this is that Tom has such great experience with stockcharts.com and such familiarity with earningsbeats.com that he's kind of in a unique position compared to a lot of other analysts out there. So he's coming on as chief market strategist. And the meat of the event tonight is going to be about some things that Tom will be bringing and some of the new things that Tom will be bringing to Earnings Beats. So I'm going to get to that in just a few minutes. But because there's so many of you that are new to Earnings Beats, what I want to do is I want to take just a couple of minutes to go over a couple of the features that won't be changing and that are really important as part of being part of our community. So let me just go over a couple of things real quick. I want to show you what membership to Earnings Beats means, and then Tom will be adding on to that to show you what else it means in addition to what we currently provide. One of the biggies, of course, a lot of people know about this, is you get access to our top 10 stock pick portfolios. Tom will be talking about that more when he comes in. That includes our model, aggressive, and income portfolios. We have quarterly webinars where Tom reveals his top 10 picks. Last one was August 19th. Next one will be November 19th, and he'll get into that some more. Another biggie for us is access to our exclusive strong earnings chart list. This is something that I'll show you a sample in just a minute. These are companies that have already beaten revenue and earnings expectations. They've got stock charts showing support breakout levels and stocks that could provide high reward to risk returns. And I'll show you a sample of our strong earnings chart list in just a minute. We have trade alerts. We issue a trade alert to our members to include the stock symbol, the entry price, price target, and stop loss. Right now, we've only got one alert out. I know that the market's been hot lately, but it's still volatile, and we're being just a little bit cautious at the moment. But there are times when the market's really hot and we feel less volatile, where we could have a number of alerts out at once. Then daily market update. I'm not going to spend much time on this because it's going to change some when Tom comes on board. But let me just show you real quickly our chart list section. This is a strong earnings chart list I'll talk about. We have another list reserved for our annual members, which is potent, in my opinion. 104 industry charts. This is exclusive to our members. All industries represented in real time, showing relative strength. Tom will probably talk about that in just a little bit, including a new matrix he's coming up with. But I want to show you our strong earnings chart list, give you a sample here. Let me try to pull it up here. All right, hold on a minute. Let's try it one more time. Here we go. Sorry about that. Okay. Here's a sample of our strong earnings chart list. These are companies that just got added 2 days ago. We added some, took a couple off. You can't get on this list unless you beat EPS, earnings per share, and you beat revenues. So you can't get on this list unless you've done both of those. Once you make it to the list, right now we have, let's see here, 329 stocks that are available to our members who use those stocks to make trading decisions. Let me show you a sample. Here's Lululemon, just got added. They reported numbers last week, beat expectations. I'm kind of excited because it's coming back to us some. You can see our chart annotated here showing the great volume. When you come up here, let me get rid of this. You see these two lines here? These lines really are sort of combined support and resistance. So you can see in the case here, this gap here, it's pulled back, fallen below that. The next level of support right in here, this one's probably going to get my attention if we pull back to that 190 level or so. And every chart has these two horizontal lines that will provide members with some ideas where key entry points and where resistance might come in place. So if this was to fall below, this would then become resistance. This level here becomes resistance as well. But the whole point is to provide our members with companies that beat earnings expectations. We update these more frequently when earnings season is in full swing. Right now it's pretty quiet. I think we added 22 charts 2 days ago, took 2 off. But just before earnings season kicked in, I think we had 100 and some, and we're up to 300, over 300 stocks right now. These are companies of all shapes and sizes, small cap, large cap, mid cap as well. So really a variety for everyone. Now, an important part of this, really important, is that if you're a stock charts member and you've got an extra or higher level membership, we can share our strong earnings chart list with you. It becomes very powerful. So if you become a member of Earnings Beats and you're an extra level or higher member, we can share that into your stock charts account. Then you can go in and you can sort and scan according to what's important to you. Very powerful. And also that relative industry group chart list will show you the industries that are the strongest and the ones that are the weakest. So if you can start matching some of the strong earnings charts into the relative strength industry group that are the strongest, that can be quite potent for trading. Now, you don't have to be an extra level member or higher to get access to our strong earnings chart list. We can actually provide you a link and you'll get access to all 329. It's just that if you're an extra or higher member at Stock Charts, you get an extra capability that I think is really powerful and potent. Let me show you a couple other quick things here before I turn it over to Tom, and I want to actually go over one other thing before I do that. Our webinars, we started archiving. You can see down here the date of the webinar, what it was and the date. This one right down here, the Power of Relative Strength, you become a member of Earnings Beats. This is a recording you're going to want to watch because it's really teaches you what relative strength is all about. And this is something high on Tom's list of things to be looking at when it comes to potential trade alerts or to letting people know which stocks might be getting ready for a big move higher. So the webinars, this important part, is going to be growing over the next number of years, and these are available to members. And one last thing I want to show you as far as the service, you're not getting this already. What you should do right away is we have a, oops, let me get rid of that. Let's try this again. Don't know why that's not showing up like that. Oh, I see. Sorry. All right, so our Earnings Beats Digest, right? This is a free newsletter. It comes out every Monday, Wednesday, and Friday. We keep people up to date on things that are going on with us. And then we'll have featured stocks, like Lulu was one that was featured today. I discussed today that it was a positive response, but I wouldn't chase it, and I'd wait for it to pull back. Lo and behold, so far we got a nice little pullback going on. So we have generally a featured stock or some kind of a lesson. So the minimum, you go to our website, earningsbeats.com, sign up for the EB Digest. I know a lot of you are getting it already. It's a great way to get to know who we are. I'm getting ready to turn this over to Tom in just 1 minute. I want to share, we do this every webinar, and hopefully Aaron can get this a link in where you can all see what I'm talking about. By the way, everybody's going to get a copy of the recording, and I'll make sure there's a link to the midnight special. So if you think you want to be part of the Earnings Beats community as a subscriber, and you're going to be around more than a month or two, so you can get involved with us, for 4 quarters. You can be involved in 4 top 10 pick webinars. You can be involved in quarterly earnings. Every quarter we have an earnings webinar where we look at upcoming earnings and talk about the companies that have reported and which ones could be high reward to risk trading candidates. So you're going to get access to all the things on here which are extremely powerful. And you can see what our service costs. It's $97 a month. You can save a lot of money if you end up signing up, today. And if for some reason, it slips in tomorrow, I'm sure we'll go ahead and honor it. But this is something I can talk about maybe a little bit more later. But really, this is the best deal you're going to get. And if you want to be part of our community over the next year, this is something that I think you should really consider. Okay. I've covered what I wanted to cover, just to give you a very, brief idea of what we do at Earnings Beats. And what I'm going to do now is I'm going to turn it over to Tom. Tom is going to talk about some things that are going to be up and coming as part of the service. And I think you're going to find all of it exciting. I'll be back a little bit later. We'll try to answer some questions, as many as we can. If we don't get to all of them, you can always send us a question. You can go right to earningsbeats.com where it says contact us. And if we don't get to you tonight, don't worry about it. You can send us a question and we'll go ahead and get back to you. So on that note, I'm going to go ahead. I'm going to stop sharing. I'm going to introduce Tom Bowley. A lot of you already know Tom from his years at stockcharts.com, earningsbeats.com. I don't think he really requires any more introduction. I'm going to turn it over to my good friend and our chief market strategist, who I'm so glad is coming back to us, Tom Bowley.
All right, thanks, John. I do need like 30 seconds, maybe 45 seconds.
Okay.
Give me that.
I'm going to give you 45. I'll give you a minute.
All right, give me a full minute. Just about ready. There's just one thing I have to take care of very quickly before I get into this.
Yeah.
So I'll be right back. Okay.
So while Tom is getting ready to, he's got so much stuff going on that we're going to give him this extra minute or so. The other thing I want to mention to you, if you're not quite ready to take the plunge on an annual membership, if you do go to our site, hold on a second. If you do go to our site, you'll see that we have a 30-day trial special for $7. And what's great about that is you get to see everything except the relative strength industry charts. That is reserved for our annual members. And here's why. Remember the stock charts, the strong earnings chart list I showed you? Last year, to give you an idea, we updated that 16 times throughout the year, 1,000 stocks. Some of them will repeat each quarter, but a lot of new ones came on. But that is a dynamic, ever-changing, rotating list. The relative strength industry group's chart list is a one-time deal. Once you get it, you've got it. So you won't be able to see that if you come in, for the 30-day trial, but you will get access to everything else. It's a great way, to get to know us at a low cost, 30 full days, and that just gives you another option if you're not ready to go annual. So let me go ahead. I'm going to stop sharing. I think I hear Tom in the background. You about ready to go?
I am ready to go.
And here he is, Tom Bowley.
All right, sounds good. Thanks, John. First, before I get started, I just want to echo John's earlier comment. I just want to thank everybody for all the support that you've given us at Invested Central and, of course, now earningsbeats.com over the years, and all the support you've given me at Stock Charts in terms of following my blogs, whether it's Trading Places or Chart Watchers, or for a couple of years I was doing a lot of Don't Ignore This Chart blog posts. And then, of course, the shows that I do over there. Really appreciate all the support that you've given me. I am very excited to be coming back to Earnings Beats. And, I do want to say that it's not official yet. I am still senior technical analyst at Stock Charts through September 15th. So really what I wanted to do today was just kind of give you a little bit of an idea of what you can expect from Earnings Beats as we transition, or as I transition back. So that's probably, the first thing that I want to do. So let me go ahead and share I want to go over a few things with you first, and then get into some of the more specific services. All right, so let's try this first. We'll talk about that in a minute. Okay. One of the things John mentioned earlier, I think he was talking a little bit about Lululemon. This was a stock that was included in the Earnings Beats Digest. It's a free newsletter. So for those of you maybe that are new to Earnings Beats and haven't already signed up, I would certainly suggest doing so. You can do that at the Earnings Beats site. And I'll just show you quickly. If you go into Earnings Beats, there is a link here to the free newsletter. And if you click, just type in your name and email address, and you'll start getting that free Earnings Beats Digest newsletter that comes out Monday, Wednesdays, and Fridays of each week. It is completely free, no cost whatsoever. And it's really a lot of the stocks that you see on that newsletter will be stocks that are on the strong earnings chart list. Many of those are stocks that we feature because they've beaten revenue and earnings expectations in their last quarter. And then also they are showing, pretty good technical. They've got a pretty good chart in terms of their recent price action, and in many cases are strong performers relative to their peers and/or the S&P 500. So I just wanted to make sure that you are aware of that. So that if you're new and if you take nothing else away from this, definitely check that out. Again, I think it's a great value considering there's no cost involved whatsoever. All right, as far as, as we go forward, I wanted to walk you through stock charts a little bit just to show you what you can expect as we go forward. And I do transition over to Earnings Beats full time. First of all, I still have a great relationship with everybody at Stock Charts. This has nothing to do with wanting to leave Stock Charts or Stock Charts wanting me to leave. It's more about the opportunities and just the way things have evolved in terms of the strong earnings chart list, the portfolios that have been created over the past year. I mentioned in the blog article back at Stock Charts when I first announced this that another big factor was being able to work with my daughter who has joined Earnings Beats. She's a CPA like me, really getting interested in the stock market. And so that was a great opportunity as well to work with her. So there's just a lot of things lining up. But mostly it's just the evolution of the service and some of the things that we offer. But before I get into that, I'm going to stay on the stock chart side. So once I come over to Earnings Beats, I just wanted to show you what you can continue to expect. So first, if you go into the Stock Charts blogs, of course, trading places, this has kind of been my staple at Stock Charts. Back in 2015, I joined Stock Charts in March. It was actually on March 1st, 2015. And one of my first trips out to Seattle when I met with Chip Anderson, and I think Greg Schnell and Aaron Swinland both of them were also at this meeting. We talked about some of the things with the blogs that we were looking to do. And one of the things Chip asked for was for someone to write about the market every morning before the open. And that just seemed like it should fit right into my lap. Greg lives in Calgary, so the market opens there at 7:30 in the morning. Of course, Aaron is out in Southern California. Market opens there at 6:30 in the morning. And I'm on the East Coast where it opens at 9:30 in the morning. So it just seemed like it was obvious that I should be the one to write about it. And I love writing about it. So that's how that all kind of evolved. Now, as we go forward, and I've been doing that since, I believe it was September 1st of 2015. And I can probably count on my two hands the number of times I have not posted when the stock market's been open. Number one, I really enjoy doing it. Number two, I think that, it's kind of like, I always use the analogy, my dad, when he would be waiting in the morning for the newspaper, he knew 6:30 is when the paper boy was supposed to be at the house with the newspaper, and he, wanted to check out the news and, of course, sports, and that's the way he got his day started. And his day was not the same if that paper boy didn't get there at 6:30. I mean, at 6:35, he was my dad was pacing. And so I just feel like the 9 o'clock time frame is when this particular blog needed to be posted every day. And so I don't know, maybe I'm a little OCD, but I just wanted to post something that everyone could get, that could be very consistent, could be educational, could maybe provide some trading ideas, maybe talk a little bit about the big picture of the market. Of course, all my opinion, but I always strived for that to be a centerpiece of what I did at Stock Charts. And so as we move forward, I'm going to continue to publish in here every day. But when you go in here and you look at what is included in here, what normally is included, you've got market recap, usually a chart or two in here, current outlook, usually a chart, sector industry watch, normally a group with a chart, Monday setups on Mondays. Usually I have at least one trade. Sometimes I'll have a link to some other trades. And you go right down the list, historical tendencies. I have this in here every day, key earnings reports, economic reports. Of course, right now, not a whole lot of earnings reports coming out, and there won't be a whole lot for the next 30 days or so, and then things will begin to pick up again. But this has kind of been the staple for me, and a lot of this information is going to be included in a daily market report that I do at Earnings Beats going forward. And there will be some growing pains. We're looking at possibly we are looking at having a new website. And so how everything's going to get posted and how it gets presented to our members is going to change a little bit. You have to have a little bit of patience here over the next couple of months as we try to figure out how we're going to integrate everything with a new website. But what I envision is that a lot of this information you're going to see in a market update. Now, of course, I'm not in a market update going to talk about what happened yesterday in the market. I'm going to be talking more about what is going on today in the market, because this is a report that will probably get published. I'll go through a timeline in just a little bit, but the report will probably be published in the morning, similar to the time that you now receive something from John. But in there will be some market action and some other things I'll talk about in a bit. But as a result of some other things I'm putting in my schedule in the morning, I'm just not going to have time. Currently, I probably spend about 2.5 hours from start to finish on this blog article, and I'm just not going to have the time to do that. So Trading Places is not going to go away, but it will be probably just a topic or two with maybe one chart or maybe two charts. I don't want it to be like the Don't Ignore This Chart blog, but it's probably going to be something similar, where it's just a very quick thought followed by a chart or two, and all the other information that's in it currently will be at Earnings Beats behind the subscription service that we offer. So that's the Trading Places blog. Now, there's also Chart Watchers, which has gone to a weekly newsletter. I don't know, probably the last few months, maybe it's been longer than that, maybe 4 or 5 months. But anyhow, it now comes out every week. It's a free newsletter at Stock Charts. So if you're not already a subscriber to the Chart Watchers newsletter, I would certainly suggest you do so. Some great information from a lot of great analysts. Now, what John and I have been doing is publishing every other week. And while I was at Stock Charts and he was at Earnings Beats, that kind of made sense. Now that we're both at Earnings Beats, I will probably write the article each week. He may sub if for some reason I can't write an article, but I've already talked to Stock Charts and they have no problem with it. So I will probably post a weekly article in Chart Watchers. So not a whole lot of change there. Don't ignore this chart. I did write in that this weekend, and there it is. Partly to announce, let everybody know over there, because I had a lot of folks that were following me at the DITC blog for a couple of years. So I posted over there to make sure everyone was aware of what was going on today. And then you can see there were a couple of stocks that I highlighted in that discussion. And so I've been told I can go ahead and publish in there anytime I want. So probably not too often, but occasionally I may a post over at Don't Ignore This Chart blog. All right. So that's it for the blogs. Now, as far as Stock Charts TV goes, currently, as many of you probably are aware, I do have a Market Watchers live show. Aaron Swinland co-hosts with me, and Mary Ellen McGonigal co-hosts on Friday. And then we'll have guests and so forth. It was a 90-minute show, just recently got cut to a 1-hour show. It's likely to be cut to a 3 times a week show soon. I'm not really sure what Stock Charts plans to do with this hour, so they'll be coming out with announcements there. But I know I will be coming off of the show, and that was just simply because I just don't have time with everything else going on and with what I'm going to be doing at Earnings Beats. It's not so much the show, but there's prep time to get ready for the show. So to do a 12 o'clock to 1 o'clock show, I'd probably need to be sitting down by 10:30 or 11. And that's when I'm going to be writing for Earnings Beats and doing the daily report. So it's just not possible to do all that. But what I am going to do, and what I told Stock Charts I'd really enjoy doing, what I've wanted to do for the last few years is do a morning show. I just think there's a lot of information right before the bell. I've been doing the Stock Chart or the Trading Places blog for quite some time. So in the mornings, beginning on Tuesday, September 30th. So it's going to be starting in 3 weeks. I'm going to be doing Trading Places Live, which is a 30-minute show, 9 to 9:30, Tuesdays and Thursdays. And I'll be going over and doing a lot of the things that I do on the Market Watchers live show. The big difference is that it's going to be before the market opens, literally right before the market opens. So you know how important earnings and economic reports are to me and so forth. So there's going to be a lot of that in the show. Of course, looking at a lot of charts, looking at the industry groups, the sectors, big picture view. But it's only going to be twice a week, and it's only a half-hour show. So trying to get all of that, the information that I've been getting in like I've been getting in at Market Watchers Live is going to be kind of difficult. So that leads me to, and that's essentially what I'm going to be doing at Stock Charts going forward. So the Tuesday, Thursday show from 9 to 9:30, and then I'm going to be doing my blogs, but lesser blog content in terms of Trading Places. Occasional blogs, don't ignore this chart, and I'll continue to do Chart Watchers. All right, so now let's take a look at the schedule as I see it going forward with Earnings Beats. So this is just a typical Monday through Friday schedule. Maybe what I can do is, let me see if I can make this a little bit bigger. Okay, and I'll scroll over, but hopefully everybody can see this a little bit better now. So I'm going to be starting in the morning pretty early. Earnings Beats Digest, I will likely be doing that Monday, Wednesday, and Friday. Talking about the various earnings reports. And if you've already been looking at those in the past, you know that sometimes it's not about companies that have already reported, but many times it's about companies that are coming up and will be reporting. And as we get closer to earnings season, there's going to be some really interesting articles, I think, in here talking about what we might expect when these companies report their earnings based on how they're trading. Not just on an absolute basis, but on a relative basis. So, for instance, software has been great for 3 years. Well, it wasn't so great today, but it's been great for the last 3 years. And so you might have a stock. I know recently Salesforce.com has been one that I haven't been a big fan of. It, tried to go higher. It hasn't been a horrible stock, but on a relative basis, because software has been so hot, it's just been left in the dust. And so a lot of times when you've got companies that are not performing as well as their peers, you can glean some information perhaps about what they may be reporting in terms of their earnings, their revenue and earnings. So it's really it's a free newsletter, but it's really an introduction to people that may be new to Earnings Beats as to what we do. We focus a lot on earnings, quarterly earnings reports, revenues. We like companies that beat on the top and bottom line. We tend to avoid, or we don't tend to avoid, we do avoid companies that are missing their numbers, missing revenues, missing earnings per share. And it depends on guidance. Sometimes guidance can be weak, But if a company is just beaten top and bottom line and then they lower guidance going forward, a lot of times the market will give them a pass. I mean, you may see the stock get hit a little bit in the near term, but I would rather have a company provide conservative guidance, even lowering guidance, and then beat it in 3 months than to miss their earnings and then come back and say, oh, but next quarter is going to be awesome. Look at these numbers we're forecasting. Well, you just missed the last quarter. So don't tell me about how great the next quarter is going to be. How can I trust that? And I think Wall Street has a problem trying to trust that. So I would much rather have a company that's conservative. And I think we saw this recently with Starbucks. They came out, lowered their guidance going forward, and stock was down 3% in pre-market. By the end of the day, it was down less than 1%. And it's really not that far today from where it was when it lowered guidance. So I just think you have to be aware of how Wall Street looks at some of these companies and how they evaluate their management teams. All right, so Earnings Beats Digest is just a simple way, a free way to get used to some of the things that we look at Earnings Beats, and hopefully will provide some solid education in those areas. All right, so then the next thing is Trading Places blog. Well, you can see here the Trading Places blog, I've got kind of marked until about 8 a.m. Now, some of these Earnings Beats Digest articles I can probably do the night before. They don't necessarily have to be done in the morning. So I'm looking at this as, instead of maybe 6:30 to 9 o'clock working on the Trading Places blog, probably going to be more like I need to be done by 7:45 or 8 o'clock in the morning. And so that's a little bit further away from the market open. So I don't know that looking at pre-earning or pre-market action is going to make as much, there's too many earnings reports that come out after 8 o'clock, too many economic reports that come out after 8 o'clock that can change the dynamics of futures. So I'm just not sure. The Trading Places blog is going to probably be more static, just looking at certain areas and what they did yesterday and whether they broke out, or maybe they've got a negative divergence. So it just might be some things that you'll want to be aware of. But that will continue, and I will be working on that 5 days a week. But what I'm envisioning is at 8 o'clock having this published. And sometimes, by the way, the software that's used to publish these blogs, I can write the blog right now, and I can tell it to publish tomorrow morning at 8:30. So I can dictate what time it gets published. So what I'm probably going to do, even though I'll be done writing it by 8 o'clock, I'll probably publish it by about 8:30. And then what you're going to see is that on Tuesdays and Thursdays, there's going to be Trading Places Live at Stock Charts. So this will probably be, a little fancier show, nice graphics. I mean, Stock Charts has their own video team. They produce these videos. They've got graphics designers, working on different slides and presentations. They got a lot of folks that are available to do all those things. So I think, there'll be a lot of bells and whistles with the show on Tuesdays and Thursdays. But as you can see, and Fridays right now is just a little bit up in the air. I'm still trying to decide what I want to do with Fridays. I just don't want to get burnt out. And that, might be a day where I just kind of sit back a little bit, but I've got some thoughts. I'll talk about that in a minute. But what I am planning on doing is Monday and Wednesday from 9 to 9:30 is doing a show right here in Zoom for our Earnings Beats community. So again, you won't have to be a paid member of Earnings Beats, but you'll have to be at least an Earnings Beats Digest member in order to access it. Because what we'll do is we'll send you room instructions, but we'll only be sending out those room instructions to our current members and to the Earnings Beats Digest subscribers. So every Monday and Wednesday when the Earnings Beats Digest goes out, at the bottom there's going to be room instructions for that Monday and Wednesday show so that you can come in and attend. We want to keep it to our community, and I think it'll be a very worthwhile. That'll give you every morning from 9 to 9:30 an update right before the market opens, either at Stock Charts through Stock Charts TV or here at Earnings Beats with our webinar capabilities through Zoom. Friday, again, is a little bit up in the air. Not quite sure what I want to do with that just yet. I will say that Friday, I want to spend a little bit more time once a week, spending or going over in a little bit more detail the portfolio stocks. I don't want to do it every day because I can, as a person who's investing in these portfolios, I don't really. It's not that I don't look at it every day. I know what's going on in the market. I know what's going on in these stocks every day, but I'm not going to trade them. So it's just a little different mentality on approaching those. But the Friday, I'm really trying to think of being maybe spending more time going over those portfolio stocks so you have a little bit more information there. All right. After the 9:30 to 10 o'clock webinar, and these are going to be strict times. I mean, this is not going to be question and answer. We have a lot of members. We got a lot of people in our community. If I open this up to questions, and I'm not saying I won't take, there won't be questions. You can ask questions. I just don't want this. I don't want to turn this into a Q&A session because otherwise I won't be able to present the information I want to present. I'll just be answering questions the whole time. But, if there are a lot of questions coming up and a lot of folks having the same question or similar questions, we'll be able to see those and I'll try to answer those more on the Monday and Wednesday here at Earnings Beats rather than Tuesday and Thursday. That's probably not going to happen at Stock Charts. Okay, and then finally, the next thing that's going to happen, and this is just the regular routine every day. There's a lot of other things happen later in the day, but these are the things that I think are going to be impacting, our members and our community the most. After the show, what I plan to do is to write the daily report. So the show takes us right up to the opening bell. The opening bell until probably 10 o'clock, I can evaluate what's going on in the market. I can look at what's going on with our alerts. I can look at what's going on with the portfolios. I can look at what's going on with the strong earnings chart list. I can run scans, and I can pass along my findings in the daily report that we're going to have that goes out every day. And again, this is going to be, I've got to be doing a lot of the work from 9:30 to 10. I'll be doing a lot of the writing from 10 to 11. I anticipate what I would really like to do is have this report that comes out very similar to the blog articles I write at Stock Charts, if in any way possible. And what I mean by that is have different sections of the report, have charts, annotated charts as part of that report. And again, if there are alerts that we have, active alerts out, like CECO right now, I would imagine that you're going to, if there's something going on with that chart, if it's either potentially breaking down or maybe it's breaking out or maybe it's getting close to our target, I'll point out, reiterate some of the things that we talked about when the alert went out, show the chart, highlight it, and just keep everybody up to date as far as that goes. So this gives you a little sense of what I'll be looking at in terms of Monday through Friday. Keep in mind that the strong earnings chart list has to be updated frequently. John, I think, talked about that a little bit earlier, but that currently has 329 stocks on it, and it's constantly evolving. So right now it's got 329 stocks, but as we get closer to the start of earnings season, what you'll find is some of the oldest stocks on the strong earnings chart list will be approaching their next earnings date. And so they will be stripped out of the strong earnings chart list. In the meantime, over the next 20, 30 days, we'll be having some earnings reports. It's not going to be a lot, but there'll be some earnings reports coming out. And the ones that I like and meet all of our criteria will be added to the strong earnings chart list. So maybe over the next month, maybe there's another 15 or 20 added. But as we get close to the beginning, end of September, early October, there are probably going to be 150 companies removed because as soon as we get close to those earnings reports in October, that'll start around the 15th. From about the 15th to the 30th, any companies reporting in that 15-day period probably will come off the strong earnings chart list as we enter October. So all of a sudden, you may see 150 companies disappear. And I'm only adding 20 because from September 10th or 9th today through the end of September, there's not going to be a lot of companies reporting. So that's why 329 stocks will all of a sudden go down to maybe 150 or 175. Sometimes we have as few as 100 on there as we get closer to earnings season and we start pulling companies off because they're getting close to their next earnings report. So just wanted to, keep you posted on that. Okay. Let's see. Next thing I want to do, I want to talk about some of the products that we have. Now, I talked briefly about this daily report that you can see down here that'll be going out. The blog. I'm not going to go back over those blogs anymore. I think you have a general sense of what I'll be doing in the blogs over at Stock Charts going forward. But let's talk a little bit about this daily report first and how it's going to be set up. So what I envision is a brief update on the market, what's going on in the market in the first half hour of the day. Are any key levels being violated? Do we have any negative divergences? What do the 60-minute charts look like versus the daily? Occasionally talk about the big picture, kind of like I do with Trading Places, my blog, up until now, the way I've been doing the blog. So you're going to still get that information. But then I want to more specifically address the things that are of importance to Earnings Beats members. And that means the strong earnings chart list. So what I would expect to do, and let's go over here. I'll come back to that in just a minute. Let me look at the scans first. So here's a scan, for instance, that I run every day, mostly for my trading. And if I see something interesting, sometimes I'll pass it along to John. But as a senior technical analyst at Stock Charts, I've been somewhat removed from what's going on over at Earnings Beats. John and I'll consult with John, but John, for the most part, has made all the decisions as to what we've been, putting out as far as alerts and that sort of thing. And so that will probably change as we go forward. And one of the ways it'll change is that now, instead of me running this for my own personal trading, I'll be running this for our Earnings Beats members. And so here's a high volume SECL, strong earnings chart list scan. And essentially what it does is it goes in, here's a global filter, the strong earnings chart list. So it only will be going in to scan the strong earnings chart list. Now on this particular scan, you can see the 90-day simple moving average is greater than 300,000. I'm not really worried about, I could even take the volumes off of it because if it's on the strong earnings chart list, I'm already okay with the volume. The stock has already met liquidity criteria or it wouldn't be on the chart list in the first place. So I'm not really that concerned about it. The simple moving average of the close for today greater than 1, that's really not going to come into play because I don't add stocks to the chart list that have a price of under $1. It's just not the type of stocks that we look for. Probably very few under $5. But this is the key right here. So at 10 o'clock in the morning, I'm going to run a scan against the strong earnings chart list to see if any of these companies on this chart list, so the 329 companies right now, do any of them show volume at 10 a.m. that is already 40% of their normal daily volume looking back over the last 90 days. So for instance, let's say over the last 90 days, there's a stock, maybe it's Lululemon, and this stock averages trading 1 million shares a day. Well, when you get to 10 o'clock in the morning, you probably should be doing maybe about 15% or 20% of daily volume. If you're doing 40% of your average daily volume, there could be something going on, and it might not show up in news. It may just be a technical development. And as a result, I think scanning for high volume on an intraday basis makes a lot of sense because we want to know what's going on early in the trading day. If we're getting a breakout and the volume is starting to pick up, that's going to be really important for us to know. If you like to play breakouts, you want to get it when it's breaking out. You don't want to get it the next day after it's already broken out. So I think this is going to be a really cool added feature to that report, because it's going to give you quickly an idea of some of the stocks that we're going to focus in on as traders. Now, you might say, well, would you just put that out as an alert? Well, not necessarily, because there are a lot of different potential trades. If you've got 329 stocks and you're running scans, I don't know, maybe when I run this scan, maybe there's going to be 5 on the list, but there might be 20. If it's a market, maybe the market's doing something, breaking out, and the volume in the overall market is heavier. Well, certainly wouldn't want to alert 25 stocks. And if there are 25 on there, I might find one that I really like that I want to alert. But you also have to understand, a lot of times these alerts are on pullbacks. We don't like to chase. We tend, almost every one of our alerts are on pullbacks, where we wait for stocks to come back to us, where we can really manage our risk to the downside. If you're getting a breakout, you might be getting that breakout, but you might also be getting a false breakout, which marks tops. So if you're just starting to jump in, that's something you have to keep in mind. You may want to be exiting later in the day if it doesn't hold that breakout level. And we don't want to get into that too much in terms of our trade alerts. We want to identify it. Some of you might be very active in your accounts. That's not necessarily what we want to do. So we're going to be putting more ideas out there for everybody. So that's one scan. Another scan this is going to be more to identify the pullbacks. Again, I'm going to be looking against the strong earnings chart list. There's also a volume thing in here. I'm not really worried about the volume. The key, what I am looking for, are the RSIs. So if the RSI is greater than 40, but it's less than 50, a lot of times an uptrending stock, when it pulls back, will pull back with an RSI bottoming somewhere in that 40 to 50 range. And so by running this scan every day, it'll constantly tell us which stocks are pulling back and might be good candidates. I'm going to pass those along. The ones that I might run this scan. There might be 20 stocks that fit this criteria, but there may only be 2 or 3 that I really like, that I think are worth passing on, and that's what I plan to do in the daily market report that you get. So imagine getting the overall market update for what's going on in the morning, and then also having results from these scans. And I want to be able to post charts. I want to be able to show charts. So I know, going through stock charts and using their blog system, it's very easy to attach charts. In this whole process of us updating our website, I'm just not sure right now as to how practical it's going to be in the near term to post these charts. That's why I was alluding to earlier, going to require some patience here over the probably next couple months, until we get the whole website revamped, get all of our services in place. I think you're going to see continuing improvements as we go down the line. All right, let's see, what else can I talk about with this? Well, another area that I'll cover in the daily market report will be the portfolios. Now, the portfolios are not designed to trade. And those of you who are new to this, I might as well just go ahead and pull up the performance here on each one of them. The first one, this is the model portfolio. It started November 19th, 1998. What these portfolios are, they're based off of the strong earnings chart list. And the way this all started was, I used to have members that would write and say, well, you've got all these stocks on the strong earnings chart list, 329 now. I can't trade 329 stocks. What are your favorite stocks? What are your favorite 5 or 10 stocks? Well, the model portfolio was born on November 19th, 2018, based on me essentially looking at the entire strong earnings chart list and saying, here are the 10 I like the best, with a few caveats. Number one, it's going to be equal weighted. So 10 stocks are going in. They're each going to be worth 10% of the portfolio. That's number one. Number two, we're only going to take one stock per industry group. So I don't want a handful, of 10 stocks. I don't want a handful of software stocks. If you saw software today, a lot of those software stocks were really hit hard. I don't think that they're done going higher, but they do fall out of favor every once in a while, and it scares. And I mean, anybody that's got software stocks today took a hit for the most part. There weren't too many software stocks doing well today. But if you get a portfolio and you look at it and you say, wow, my favorite 10 stocks, 8 of them are software stocks. Well, that's great as long as software continues to do well. But if you have a day like today, your portfolio would be ruined. So that is not really practical. So the model portfolio, 10 equal weighted stocks, 10 different industry groups. And the idea is to try to get these industry groups, try to get the strongest industry groups. So you're taking not only the 10 best stocks in an industry, or the best stock in an industry, but you're also looking at 10 of the best industry groups. So it's really and truly putting together a portfolio of best of breed, best of best, best stocks in the best industry groups. That's the whole idea behind the concept. Now, as you look at this on your screen, and let me see if I can, there, makes it a little bit bigger here going across. But the model portfolio started right here at 100. So if you come across here, you'll see it was at 100. I keep a spreadsheet. When we first started the model portfolio, I set up a spreadsheet, and each of the 10 stocks, I had this fictitious $10,000 that went into it. And so when you added it up the very first day, it added to $100,000. Well, I divided that by 1,000 to come up with 100. And so now using a user-defined index at Stock Charts, I could track the portfolio by simply taking the value every day and dividing it by 1,000. And so that's what is reflected here on this chart. So back in November of 2018, we had the big move up. The S&P went up. The model portfolio went up. The S&P took a big hit. Model portfolio came down. And then you can see the performance. So the top part is the model portfolio. The bottom part is the S&P 500. Right now, the model portfolio, since even with the big hit it took today, which definitely got hit today. And actually, before I even get into that, I can show you. Look at today was really a weird day. And I'm not taking individual stock questions for this webinar. I really just want to go over the service. But today, if you're wondering why the portfolios didn't perform well, if you look at what went up and what went down, it's almost an exact flip of what's been happening in the market for the last year, or certainly the last several months. I mean, restaurants and bars, best area in consumer discretionary, in my opinion. It was at the bottom. It was one of the few, down 1% today. It wasn't like it, was flat. I mean, it went down 1%. And you can see almost every consumer discretionary area was up today. Go over to consumer staples, one of the best areas, best 2 areas probably. I could probably say best 3 areas. Non-durable household products, you can see on that little mini chart, hopefully you can see that, going straight up. Soft drinks going straight up. And personal products going straight up. They're the 3 that got hammered. The ones that have been getting crushed, tires, brewers, drug retailers, those are the ones having the huge days at the top. And it was like that everywhere. Look at coal. Coal was leading energy. It's horrible. Down at the bottom, renewable energy, which has been one of the best areas. Financials, banks, that's been kind of flat. Asset managers, horrible. And then look at the bottom, financial administration, specialty finance, consumer finance, insurance brokers. All the areas that have been leading the financial stocks were the ones, they're not just lagging, they went down today, 1%, 2%, 2.6%. Medical equipment, best area by far in healthcare. Not today. Medical equipment got hit. Look at industrials. The leaders, marine transportation, been horrible. Transportation services, been horrible. Commercial vehicles, horrible. Look at what's at the bottom. Business support services, been on fire. Defense, been on fire. Waste and disposal services. This was one of the weirdest days I think I've ever seen. Materials, you can see aluminum, which has been horrible. And then gold mining and mining, which have been the best areas, they're the ones that got slammed today. And it's literally across the board. Software, there's software. And you think, okay, software was only down 1%. Well, that's because of Microsoft. many of the stocks in software. And if I pull them up and we sort this thing, look at the carnage in some of these. And what I saw was a lot of the, I'm gonna sort this by scooter rank. Look at the ones that were the best scooters. Shopify down $21. Digital Turbine, APPS, down 46 cents. This came way up off the low. This stock was down about 15 or 16%, I think, on the low. Total Systems, okay, that one's only down 2%. That was a winner. Coupa Software has been on fire, down 7.89%. AYX, down 15%. This thing's been straight up. But this is what I saw pretty much across the board. Was any of the, there's APPN, another one, Appian. This has been a really strong performer. You can see the Scooter, 91.5, down 7%. Live Person, down 7%. These are the highest Scooter ranked stocks. So today was just a weird day, and I don't really have any information other than what I see on the charts, which is it looked to me like the market, maybe some of the big money that's made a lot of money in these areas simply said, you know what, financials are beaten up. Some of these other areas are beaten up. I'm going to kind of, rotate. We'll have to watch to see if that continues. But my gut feeling is that this probably won't last long. I think that some of these companies getting beaten up, we're going to see money rotate back into them as they get down to some pretty attractive levels. But anyway, I just wanted to mention that. Okay. So let's talk about these portfolios a little bit. And here again is your model portfolio. So it is up 50.89%, even after today. This was updated through today's close. That's what I was working on right before we started this. I wanted to, even with it being a bad day, I want to make sure that, we have the latest information. Model portfolio since November 19th of last year is up 50.89%. The S&P 500 over the same period is up 10.69%. So I think using relative strength and using the equal weighted system, I think this is already proving to be a very strong system. Does it work every day? No. Does it work, every week? No. If you go back here, you'll see that there have been some times when, here the market was breaking out. The S&P was breaking out the new highs in early July. And even though the model portfolio was going up, it was not breaking out. But usually it's the other way around. Like in August, if you see all that weakness here off of the selling at the end of July, early August, during all of that selling, the model portfolio broke out to new highs. So part of it is just profit taking. A lot of these stocks have done extremely well. So there is your model portfolio, clearly outperforming. This is the one that started back November 19th. Now, the next two portfolios that I show you, the aggressive and the income, did not get started until May 19th. And that, when I said that earnings beats has been evolving and just continues to get better in terms of the services and the products, this is a little bit what I was referring to. I started trading stocks that beat earnings expectations several years ago. We actually started Earnings Beats. We changed the name essentially from Invested Central to Earnings Beats back in the fourth quarter of 2013. So that's kind of when things started evolving in this direction. And then we started putting together this strong earnings chart list and started sharing that with members. That's probably been over the course of, I don't know, maybe John probably would know better than me, but I'm guessing last probably a year or less than a year, maybe. I'm not sure. But then, so we started sharing that list, which started generating a lot more interest in earnings beats. And then we started these portfolios, and now we've got all this, these massive returns and outperformance. If I go to the other two, you can see now the aggressive, if we go back to the model, you can see the model kept breaking out, putting in new highs. The aggressive hasn't done that, but the aggressive is still up 14.42% since back in May 19th. And if you look at the S&P 500 since that time, it's up only 4%. 14% is a whole lot better than 4%. So even though this month, September, has not been particularly good, and I'm learning from this too as we go forward, by the way. One of the things I'm already thinking about for next year is being a little bit more conservative in this particular time period. Maybe going a little bit more with real estate, consumer staples, and utilities. Not a lot, but maybe throwing a couple of those stocks in just to maybe soften the blow from any summertime weakness that we feel. So those are some things I'm thinking about. But the aggressive going into August, and historically, August and September these have been 2 months where the money does tend to rotate more toward defensive areas of the market. So I'm not shocked that the aggressive group is getting hit, but maybe there's a better way to play it going forward. Something I'll be thinking about. We'll see how things continue to evolve here. But the aggressive is still significantly outperforming. Now, the income portfolio, and for those of you maybe that are a little bit more conservative and you can't stomach these big moves to the upside and downside, well, everybody can stomach them to the upside. Nobody can stomach them to the downside. But, if that's not really your cup of tea, then maybe the income portfolio makes a lot of sense. Here you can see we just broke to a new high. I think this is much steadier, not nearly as much volatility. When the market, the S&P struggled in August, you can see the portfolio actually went up and made some new highs. And recently, today wasn't a great day, but again, the whole market got upside down today. I don't really know exactly what was going on, but it was really a weird day. But the S&P, again, up 4% since May 19th. The income portfolio is up 8.56%. These are companies like Colgate, Waste Management, companies that are big, pay dividends. And oh, by the way, all of these performance, everything I'm showing you in performance for the 3 portfolios, that it does not include dividends. And that's a pretty big deal when it comes to the income portfolio, because these companies all pay dividends, and the average dividend yield in the portfolio is about 2% per year. So that's another 0.5% per quarter that needs to be kind of factored in, which I have not factored in. The S&P 500, on the other hand, is a total return index. So it does include dividends. So I'm outperforming. I'm stripping out, not even including dividends, and I'm outperforming the S&P 500, which includes dividend return. Anyhow, I think the performance speaks for itself. I think that they've done incredibly well. Again, they're based on the strong earnings chart list. No stock goes into these portfolios unless it's already on the strong earnings chart list. And then it's simply going through finding 10 equal weighted stocks within 10 different industry groups, and those industry groups being very strong. Now, when I pull up, and here's the industry group relative strength, and anybody who is an annual member at Earnings Beats, we will send you a copy of this chart list. This is a chart list that doesn't change. Once you have it, you have it, because the industry groups don't change. If I pull up, and I was just saying how this is looking at the last 6 months, and the groups that have outperformed the S&P 500 by the most over the last 6 months. And if you noticed, renewable energy, remember I said that was the one area in energy that's been strong, but not today? Well, I'm going to make this smaller. Hold on one second. Okay, so here is renewable energy relative to the S&P 500. So if you get this chart list from us, essentially what you have is this setup on every industry group. So when I go in here, you can see these are all of the industry groups relative to the S&P 500. You can set it up yourself, but it's a whole lot easier just to download it if you're an annual member. We will send it to you. You do have to be a Stock Charts Extra member or above. If you don't have an account at Stock Charts, you can't download it, because where would you download it to if you don't have an account? If you do have an account, you need to have at least a level that's high enough where you can have more than one chart list. And I believe that begins at the extra level. So if you're an extra level member or above, in addition to getting the strong earnings chart list, and let me just show you that real quick. I know John went over it a little bit, but here is the strong earnings chart list. And here are all of the individual stocks in this strong earnings chart list. So last one is numbered 4366. Zoomies, you can see this one recently just made the breakout. So the last one, the reason it's the last in here is because they just reported. So they literally just reported. Beautiful move up here. We don't like to chase, but this is one. If it comes back down into this zone, I think that would be very, reward to risk would certainly look a lot better. Now, ZUMZ and all of these stocks in the strong earnings chart list are annotated. They're not fully annotated. I'm not using Fibonacci's. I'm not trying to look at every chart pattern. What I'm essentially doing is trying to find the biggest support levels that I see on the chart. So, for instance, Zoomies comes out, gaps up with its earnings report, and when it comes back down to 29 here intraday, that's where buyers come back in. And now all of a sudden the next day it's at 33. And look at the volume. So if we ever get back down close to 29, I know that's where buyers came in. So that's why it's marked as a key area of support. The other one I think is pretty obvious here. You've got this prior high. Well, Technical Analysis 101, TA 101, broken price resistance becomes price support. And also the bottom of gap support is right at about that same level as well. So these are going to be two key areas. Well, you might look at this and say, well, yeah, but it's at 33. I mean, it's not coming all the way back down there. Well, yeah, they do come back down there. And in fact, let me see if I can find, well, I know a way I can find it. Let's view all. And I'm going to sort these. There's a lot of things you can do with these chart lists, by the way, and I want to try to do a little bit of that with you and show you. But I can sort it by symbol, and I can look for the one I wanted to show you, which is APPS. Now, APPS, I'll let you know, even though you're not some of you aren't members. This is on our aggressive portfolio. It's in our aggressive portfolio. Stock was down 6% today. I want you to look at where it went to on the low. Now, this has been a great performer. This stock was the best performer in the aggressive portfolio until today. And, you know, it was up 10%. It went out on August 19th. So it would have been like around $6.50 or something like that. And the stock got up. It wasn't far from being $8. I mean, it had a huge move. But there's a reason why it's in the aggressive portfolio. It is incredibly volatile. And I expect volatility. But when you break out and you're looking and you say, wow, APPS is up at $7.50. And I say, well, the best support area is probably initially down around $6. Probably when it's $7.50, you're like, there's no chance the stock will go to $6. Today's low was $6.13. That's how crazy today was, and especially with these software stocks. Huge volume, and you say, well, there's a lot of distribution. Well, not necessarily. There could just be a lot of panic. You get folks that are jumping in at $7.50, $7.75, and the stock's trading down $6.13 a week later. Anybody who's trading off emotion is not going to be happy and probably going to be bailing on the stock near the low. And so we try to avoid that, but we have to recognize where, you know, some of these stocks, you know, if they, and you know, I guess one question would be, well, why put out a stock that's so overbought? Well, last quarter, ENPH was our best stock. The stock was hugely overbought on May 19th. It went in and went up 114%. Or maybe it was even more than that. Maybe it was 120%. I'm not sure. Over the next 3 months. So trying to figure out exactly when these stocks are going to pull back or when they're going to continue to go is really impossible. The whole idea, again, is by taking 10 stocks and only making them 10% of the portfolio. Even if a stock dropped 40%, one stock dropped 40%, if it's only 10% of your portfolio, you're only losing 4% of your portfolio. And what you're hoping is that you're going to have other winners that are going to offset that. And so I don't worry as much about these stocks on a day-to-day basis. I'm going to hold them 90 days. At the end of the 90 days, I'm going to get out, and I'm going to look to see what the next best 10 stocks are for each one of these portfolios and go with it. So anyhow, there's your model portfolio, which I think's, you know, done extremely well. Aggressive portfolio, not as much the last few weeks, struggled a little bit, but I think overall this one certainly has outperformed by a mile. And then the income portfolio also has done very well. All right, let's look at those. I'm going to go back to the industries and show that a little bit, because these charts, I think, are really important in determining what areas you want to look for in the market. So here you can see, you know, renewable energy. Next one here, let's pull up the second one, which is the full line insurance. This one had been in a downtrend, but it certainly looks like it's a change of character here. And so you can see why over the last 6 months it's been one of the best performers. Now, if I had done this over the last year, wouldn't have been one of the top performers, but last 6 months for sure. I mean, since March, it's been pretty much straight up versus the S&P 500. So this is a group that has certainly been a great area to invest in. Another area within the financial space, specialty finance. Now, lately, it's not been so great, but I think looking back, you can see, and this is a relative chart. These are relative charts. This isn't just showing specialty finance going higher. It's telling us that it is crushing the S&P 500. And that's important because if you want a portfolio to beat the S&P 500, the best way to do that is to be in stocks that are in industry groups, solid stocks in industry groups that have been great performers. So if I go into, let's say, all right, this is the specialty finance index. Let's now go and look at the strong earnings chart list. And I want to show you how powerful the combination of all this can be. Because now I can go into my strong earnings chart list. I can view all, which is going in, and under this little drop down, I can view summary. And now it's showing me all the stocks here. Now I can also, under columns, I can decide what I want to show on here. Right now, sector, industry, scooter, and market cap, these four are not highlighted. So they're not showing up anywhere on here. Well, I kind of like that information. So I go in here and I'll click on sector, industry, scooter, and market cap. And if you want volume, you can add volume on here. And now when I look at this, I can see a lot better, what's going on. So let's say specialty finance. I just looked at specialty finance and I said, hey, it's been one of the best performing areas. So let's take a look at specialty finance. And if I search, hold on one second. Still getting over a cold. So after doing the show today, might be running out of voice. Anyway, here on specialty finance, if I go into my strong earnings chart list and I type in the search box, specialty finance, here are the stocks. And if I sort it by scooter, these, without saying which ones are on our strong earnings chart list, you might, those of you who are members might recognize a couple of these names. But these are the types of stocks that you want to be in, because specialty finance has been strong. And I wouldn't put all four of them in my portfolio, but I'm going to look at them and pick the one that I think looks the best. And at that point, those are going to be stocks that I'm going to be considering. All right, so let's see. That's another way to use the products that we have going forward. And again, I want to stress that the industry group, and I'm actually developing, I don't have one to show you right now, but I'm developing an industry group relative strength matrix. And the whole idea here is to find not just the top 10 or 15 industry groups. That's kind of easy to do. But I want to start looking at the groups that are beginning to make a move in terms of relative strength, changes in relative strength, maybe moving, for instance, from minus to a positive. And let me give you an example here. Let's go look at, well, I mean, I know computer hardware is starting to really pick up, been very strong. But you can see it was in a downtrend in the fourth quarter of last year, made a big move up. And then when the trade war hit end of April, early May, first half of May, it came down again. So see how computer hardware, when we started talking about the trade war, really got hit on a relative basis? Well, one thing I mentioned on Market Watchers Live, and I've been talking about of late, is that in August, when we had the same trade-related fears, all of a sudden computer hardware didn't get hit. And it is still moving up and is on the verge of breaking to about a 10-month relative high to the S&P 500. Look at the relative PPO strengthening. This is a group that's starting to see more than its fair share of money. And you look at a company like Roku, that's been our best performer. Stock has been up. We put it on the model portfolio May 19th. We kept it on the model portfolio August 19th, and the stock has been a monster. Although today's action, there was a reversing candle on Roku. So trading perspective, you might say, hey, maybe it's time to move to the sideline for a little bit. I think from an investing perspective, yes, short term it could pull back. I still love the stock though. So as an investor, I don't want to sell. What if I sell and the candlestick doesn't work? Next thing I know, Roku's breaking out again. Then what do you do if you're an investor? So you have to understand how you're approaching the market, and you have to understand all the various tools that we're providing in earnings beats. But I think that it is going to be a dynamic service, being able to say, okay, we're breaking out, making a relative breakout on computer hardware, Apple, Roku. These are some of the names you need to be aware of as money, starts rotating into these areas. These leaders are going to benefit from more money coming into the group. So very, very important to watch not just the top performing groups, because you're probably not going to see computer hardware up there. And another one you're not going to see up there is defense, although it's starting to get better. But defense got hit today. And you look at this pulling back. But I mentioned this group back in April and May when we were making this breakout above the 20, above the 50, and look at the relative PPO moving into positive territory. That was 3 or 4 months ago. And some of these defense names have done incredibly well throughout this run, even though, again, today and the last week or so hasn't been strong, maybe in the last couple of weeks. But this is a group that I believe on a pullback, you want to be looking to get in and stick with those leaders. So you go over to the strong earnings chart list and view all. And the summary, and again, just showing you how easy it is to get here. Got all this information now. I'm going to type in defense. What stocks do I have in here of defense? Oh, Lockheed Martin and Northrop Grumman. Those are the two with the highest scooter ranks. But you've got others in here, General Dynamics, Raytheon, but their scooter is not going to be is not as high, so they probably don't look as good on their chart. But again, this is the way you can zero in using our service to find some of the best stocks within some of the best industry groups. So I think it's going to be really cool. But one of the things that I will focus on, I'm going to go back over to this Excel spreadsheet, because here, and all right, here, probably on Friday, I'm thinking about doing the having a matrix. It's either going to be on Friday or on Monday. I haven't decided. It gives me the weekend to work on it. If I do it on Monday, if I put it into the daily report on Monday. So I'm still thinking about it, but at some point you will, in one location or another, you will have probably a weekly update. And those are weekly charts that I was showing you, by the way, on those industry groups. So there's no point in doing every day. I mean, it's just overkill. Not a whole lot's going to change, but week to week. And what I'm going to be doing is showing on this matrix of running total. So I'll be able to see, for instance, if defense has gone up 4 or 5 weeks in a row. That really starts to paint a much more bullish picture than simply having one good week. And so anyhow, I think that'll add to the service. Now, I did mention these Monday setups. The Monday setups will no longer be in the Trading Places blog. I think I mentioned it earlier, but if I didn't, it will be in the Monday Trading Places Live webinar. I will do that every Monday. So if you like those setups and you've been getting them from the Trading Places blog each week and you're not a member of Earnings Beats, you can still get them, but you need to be part of the Earnings Beats community. So you need to at least be an Earnings Beat Digest member. And again, that's the free newsletter. All right, I think I could go on and on about the services, but I think for the most part, trade alerts will be part of the daily report. I think I mentioned that earlier. That's essentially what I wanted to go over. John, I don't know if you want to join in, but there is we have been talking about doing a new website, and I'd like for the website to be more intuitive, more seamless. When you're looking for something, to be able to go into the website and quickly be able to find it, because things will be laid out a lot better. You have to understand that the current website that we're using is one that we've used for probably 15 years. And it served us well, but with all the evolving services and all the things that we're using at Stock Charts now, it would certainly seem like it would be a lot better if we can make things very intuitive. And I don't know exactly how all this is going to play out, but I would love, for instance, to be able to have the strong earnings chart list every time when we update it. Simply let everybody know on the website that here, come in here, you click on this list, and then you hit download. You enter your user ID at Stock Charts, and boom, it downloads into your account. That way, we're not sending you the list. We just simply let you know that it's ready, and you go into the website, know where to go, click on it, type in your user ID over at Stock Charts, and then download it right into your account. Same goes, if you're an annual member and you use that industry group relative strength chart list, that would also be available like that as well. But that's really what I wanted to go over, John. I know I probably went a little over an hour, and I'm sure we probably have some questions. So why don't I just hand it back over to you?
Yeah. Okay. We actually answered a lot of questions during the presentation. And, if there's any that we don't get to tonight, because we're going to wrap this up.
John?
I am here. Yes. Can you hear me, Tom?
Hello, John.
I am.
You must be muted or something's going on, John. I'm not hearing you.
Lost me.
This is Erin. I can hear both of you. I don't know if you all can hear me.
Anyone? Not sure what's going on.
Okay. Hey, hold on one second, folks. Can you hear me?
Still not hearing anything. Must be a setting or something that maybe got clicked. I don't know, Aaron, if you're there.
Can you hear me?
Are you there?
Okay, folks, sorry about that. We're having just a little technical difficulty, but I think we've lost Tom.
I'm here.
Oh, you're there?
Yeah.
Oh, now you can hear me. Okay. I don't know what happened.
Why?
We had a little back and forth going on.
Oh, okay. Yeah.
I'm saying we answered a lot of questions,
Mm-hmm.
and it's just going to be, we're not going to be able to get to every remaining question. A lot of them are duplicates. But let me give you a couple of questions that maybe you can address, okay? And we'll wrap this up soon. Of course, somebody asking about, what happened to the portfolios today. A lot of people asking about stops. I've pretty much told everybody that these are meant to be held for 90 days. If you look at this day to day, it can drive you crazy. But I remember times, for all three portfolios during the 90-day periods where it looked pretty bleak when they made big comebacks. So how would you respond to that?
Well, I mean, there's definitely been times where it's pulled back. Again, this is a 90-day situation. It's not a 2-day or 1-day thing. So I don't really worry too much about the performance on a day-to-day basis. I think the group that got hit the hardest today was the model portfolio, but last week model portfolio absolutely crushed the S&P 500. I mean, it probably outperformed by 4 or 5 percentage points. And then today it went down probably by 3 percentage points. So I think when you're dealing with model and aggressive portfolios, I think you're going to have to deal with some of the back and forth. I thought today was a very unusual day in that, as I pointed out, I also pointed out on Market Watchers Live, I don't know that I've seen a day where the market was not bad. I mean, it was an okay kind of a day. And yet all the groups that had been leading the market to the upside for the past few months, almost every single one of them were down, while areas of the market that had been beaten up, completely beaten up, were actually leading. So it was a really strange day where none of the leaders were performing well. So as a result, I think that the portfolios got hit. But if you're going with relative strength, and the relative strength leaders are performing well, obviously you're going to go up. And when you have days like today where relative strength was not really a factor, and there was a lot of profit taking in some of those areas, and you're going to go down. But yeah, I think the long-term picture, I think, as I pointed out, I try not to get too focused. Now, if you're trading these stocks, then yeah, I think there's some things that you need to be aware of. I mean, I would never hold some of these stocks in a trading account with the way they got hit today. But from a, we're talking about holding for 90 days. I don't see any reason because of 1 or 2 days to make wholesale changes.
And then there's a question, I did answer it very generically about what Scooter stands for. I did mention that it's really a way of ranking on a technical basis, the strength of stocks, and the higher the number, the better. I'm not exactly sure what all the Scooter stands for.
Well, it's Stock Charts Technical Rank, SCTR, developed by John Murphy. I think it's a way to show relative strength. So when you get a stock that has a Scooter SCTR that's up in the 90s, then what it's basically saying is that it ranks among the best. I mean, it's one of the best among its peers. And when I say peers, I'm not talking about in its industry or in its sector. I'm talking about market cap. So the Scooter evaluation is based on market cap. So a large cap company is going to be ranked versus other large cap companies. Small cap companies are going to be ranked versus other small cap companies. So there are some, any technical tool or anything you do has got, strengths and it's got weaknesses. There are a couple weaknesses, in my opinion, with the Stock Charts Technical Rank, and that is, let's say you've got a small cap stock that's been doing okay, but let's say it's in software. So software has been on fire. So you got a small cap stock. Small caps overall have not been very good. And you might have a small cap software stock that's been okay. It's not one of the leaders in software, but just because it's been pretty good because of its overall group and because its peers in small caps have been so weak, you might have this stock that really isn't, setting the world on fire, but it might have a Scooter rank of 95 among its small cap peers. And so there's, that's one weakness. The other thing I would say about the Scooters is that if you actually go into the chart school at Stock Charts and look at how it's calculated, it doesn't, you don't really look at relative performance back beyond about 5 or 6 months. So this is not a long-term relative ranking system. It's short-term. Next.
Okay, Tom. Yes, Tom.
Yeah.
One more question really has to do with, the question says, will Tom provide us with the coding for his stock chart scans?
I'll certainly show him enough. I mean, I'm not a real sophisticated coder. I mean, if you looked at my scans, they're pretty much using the basic. A lot of times what I end up doing is going off of a predefined scan that Stock Charts has, and then you can edit those. I would just simply say, and I'm going to go ahead and share because I know that we're not sharing anything right now with everybody. So let me share my desktop. And we'll go over and take a look at a scan. I mean, you can see this is not exactly rocket science that I put together. I mean, I'll be happy to share it with you and go over with you and show you how I set it up, but it's pretty simple. The biggest thing really is just using the global filter. You've got all of your chart lists. And so if you've downloaded our strong earnings chart list, just go in here and under the group global filter, just make sure you hit that strong earnings chart list. And then you can, pretty much set the rest of these up. I think it's pretty simple.
Great. Well, my friend, you've answered everything.
Oh, wow.
Oh, we've been busy.
All right.
Yeah, actually, this is a great, one thing I'm finding out about Zoom is that it's just so much more efficient than our last platform. I do want to mention a couple of things real quick. Let me, hey, Tom, can you stop sharing?
I already have.
You did stop. All right, hold on a
You
second.
don't have to stop sharing though with this software. I mean, you can just you can share your screen. It just takes it away from me.
Oh, I see. Okay. Hold on a second. Tom's very familiar with this whole thing. All right, hold on a minute. Okay. I'm going to grab it from you. I just want to throw this up one more time, and I want to mention to everyone when I send the recording out, hopefully we'll have the recording out to everybody by tomorrow. I'll make sure you get a link to this special, because really you're going to be around for a while. You'll save a lot of money. This is really the way to go. And you've seen everything we're doing and going to be doing in the future. I think it's going to be awesome. So watch for the recording over the next 24 hours, if not less. And I'll make sure you get a link to this special, and we'll honor it, right through tomorrow. You can also go to earningsbeats.com, and where it says contact us, just send an email. And if you're interested in this special, just say I'm interested in the midnight special. I'll make sure you get the link, and we'll make sure you get squared away and signed up. Okay, let me gonna stop sharing now. That's it, Tom. I think we're done.
Yeah, I want to thank everybody again for coming in. Hopefully you enjoyed it, and hopefully you're looking forward to a lot of the things that we'll be providing as we go forward. I'm really excited about the new setup, lineup, and I think we'll have some great information, and really look forward to building the community. So also want to mention any of you that have kids or grandkids or friends or business colleagues or whatever that you think would benefit from Earnings Beats, be sure to give them our earningsbeats.com address so that they can come in and sign up for that free newsletter. It really should begin, especially one of the things I'm very interested in doing is trying to reach out to some of the younger folks that maybe are struggling with the market and not quite sure where to turn as far as the market goes. They hear so many things negative. The media can be just torturous in terms of what you should be doing with your money. And so, if you have some folks that that are aware of that might be able to use our service, certainly point them our way. Really appreciate it.
Okay.
That's it.
Thanks again. Everybody have a great evening.
See ya.